And we're back. So right now we're going to talk about yet another aspect of finance that is gaining ground, and that is buy now, pay later schemes and companies. And to do that, I have a couple of great panelists, Fawaz Ghazal, who is the chief executive of FLOOSS, who will join me on stage, and Remo Abbondandolo, who is the general manager in the region for checkout.com. Gentlemen, please grab a seat. Thank you for joining us.
Thank you for
making it here. Well, Fawaz, you actually are here. Maybe I can start with you. And the title of the panel is all rather ominous. What threats do buy now, pay later schemes pose to banks? We might get onto that question later. But I would like to ask, maybe to begin with, what opportunities do buy now, pay later companies offer? Especially in the regional context and maybe specifically in Bahrain.
Okay. So buy now, pay later opportunities in the market is more empowerment, more financial inclusion to different segments. We see a lot of millennials, Gen Zs are looking for new ways to interact with their merchants, ability to have credit, and many times they cannot have that on the conventional products on a credit card because the banks have a different credit risk models that they are dealing in the market. And that's enabled them to access different products and services in a much cheaper way and a better cash flow for the customer itself, especially when inflation went up.
And how do you see it, Remo?
I think Checkout.com as a global company, we obviously look at different payment methods around the world, and we've been in the region since 10 years. And what we see that it's definitely one of the parts of the world, MENA, where buy now, pay later has been growing faster than others. We had the experience in the US, in Australia, in the UK, but the adoption that we saw in MENA was faster than many other places we have been operating. And that being also what Farah said in terms of the type of the demographics of the population, but I think also the convenience of having this as a payment method. We also did research at Checkout.com. Every year we do a digital transformation report. We survey consumers, we ask our merchants and partners about the trends in the ecosystem, and we noticed that up to 62% increase of year over year of usage of buy now, pay later in 2023 versus 2024, which definitely keeps saying that it's a positive trend. At the same time, we also see something interesting, that if we ask consumers, what's your favorite payment method, only 3% of them, they list buy now, pay later as the #1 payment option, which suggests it's more like a convenience rather than a necessity.
So would you said that convenience is, a reason why people adopt this method of payment in the region. Is that different to other parts of the world? I mean, well, why would that differ? I mean, it's as convenient in all as a service. If you exclude everything else, the service itself is just as convenient here as it is in London, as it is in Sao Paulo, as it is in wherever, Singapore. So do people in this region value convenience more, or do they have less access to other options? Why is the convenience aspect here more salient than it is in other places?
It's a definitely interesting question. I think, first of all, obviously, see, access to credit is a bit different than other parts of the world. Definitely, this is something that we notice as a key factor of the difference across different countries. But also goes back to I would say, the options available. Buy now, pay later, when it comes to the region, like multiple providers, then we can see a bit of consolidation. And now the convenience part, to answer the second part of your question, we also notice like specified business on buy now, pay later. Companies, they're only doing buy now, pay later for rent. Company doing buy now, pay later only for education. So I think this is probably something that we notice a big difference compared to other areas.
I would say convenience plays a big role in this our region because the access to credit is much less than the Western world. So they don't have a lot of options. And if you look at credit card penetration, except UAE, it's considered compared being low compared to UAE and other Western nations, European or US. And I think the new generation has an aspiration to have like affluent type of products, luxury items, gadgets that they want to access. And that buy now, pay later give them that ability to be included and have that credit facility provided to them rather than the conventional credit card being given to them.
So So could you give us a sense of just how fast this is growing in Bahrain, for instance?
So Bahrain we just started. We started our own beta launch in FLOOSS, and we think there's another BNPL player coming to the market. But we look at the KSA, there's around 10 million BNPL users, and I think it's right now between 1 out of 5 consumers today are using BNPL, and most of the users are buying online and offline. And we see that trend is coming to Bahrain, similar to KSA and UAE, and there's a high adoption, and let's say the millennials and Zs are asking for it. And that's why merchants are now putting pressure on companies like us and others to provide these facilities to their consumers.
And what does the rest of the region look like?
The first year we did the report I was mentioning before in 2020, buy now pay later was almost insignificant. We're talking about something like 2%. 4 years later.
2% of transactions? Or?
Of the total transactions. So assuming like a normal e-commerce company say, hey, out of 100 transactions, if you look at specific place such as Saudi, you have majority of the payments do with MADA, the local payment scheme. Bahrain, you have Benefit. Qatar, you have QPay, Canet in Kuwait, and UAE, obviously, you have like credit cards and debit cards quite dominant, but it was very, very small. Now it's up to 62%, as I mentioned before. So the growth has been like significant. And I think also this is telling us that when things happen in this part of the world, they tend to happen very quickly. The adoption is actually very significant. Another good example can be Apple Pay. When it was launched in the region, we saw a grow much faster than mature countries such as UK and the US. And we know that, for example, for a digital wallet such as Apple Pay, this region is very relevant. So all I'm saying is that when there is changes in this ecosystem, we tend to see the adoption very, very quick in the region.
So how, coming back to the sort of nominal title of the session, what threats do such companies pose to banks, or more broadly to the sort of traditional financial services, credit card operators, and so on and so forth? So do you see buy now, pay later companies really taking significant market share, or do you see them coexisting and people using buy now, pay later for some purchases, credit cards for other purchases, or do you see like regions where credit card penetration is low, actually just bypassing credit cards and going straight to buy now, pay later schemes and sort of staying there and having a different trajectory of financial inclusion?
So we see the market is going to transfer. It's not a zero-sum game. So credit card will continue to exist, but we think the market share of credit card out of the total purchases happening will decline. So BNPL is here to grow and will grow more. And we believe also there's another vertical coming into the market, which is embedded finance, that allows consumers to do a longer tenor payments at the point of sale or at the checkout page. So today, banks have to change because that's what the consumer wanted. Today, millennials, today are in their 30s. Tomorrow, they will be in their 40s in 10 years' time. Those are your main consumer segment. And Gen Zs and Gen Y are going to grow up. So if you don't do those changes and adapt what the consumer wants, a digital-first type of an experience and a mix of products, not just a credit card, BNPL, and embedded finance, for sure you'll be losing market share. But we believe the total market of credit card, BNPL, and others will expand. It will not shrink. But the customer needs more kinds of products and services. No, a single product will win the total spending of a consumer. They will be using multiple products.
Will a single consumer be using multiple products, or will it just be different consumers using different products?
It depends how affluent that customer. So highly affluent customers, they will use a credit card, they will use a BNPL, and they will use another embedded finance. Depends on what he's purchasing. If it's a loan, for example, if I want to today buy an insurance policy that I have to pay, let's say, $1,000 today, I might get an embedded finance, say you can do it in 12 months. But if I want to go buy the newest iPhone, I go to a BNPL product and do 4 months because I might have a discount on the BNPL marketplace, or the merchant is offering at the point of sale or at the checkout page. These kind of experiences depends on the consumer. More affluent customers have more options. Less affluent customers will have fewer options. Yeah. Depends on the credit risk they are adhering there. And we see that is going to depend on the segment that you are targeting in your offering to the market.
Then Rio, do you see it similarly, or?
I see more on the coexistence, because if you look at also the way how buy now, pay later works today, the consumer might select buy now, pay later as a payment method, but ultimately will repay with a debit or credit card. So there's still an advantage back on the ecosystem. And the second thing I will say is that this is also a region that 5-6 years ago, the biggest payment method was cash. So obviously more digital payment solution, regardless if it's credit, debit, or buy now, pay later, or digital wallet, overall has been helping the entire ecosystem to mature. If all, the traditional players like banks, they had the higher incentive to try to innovate and try to see what was the key differentiator for them. And that's where we can see obviously a lot of fintech coming up, because they fill the gap of traditional players in the ecosystem that they might not necessarily do.
That's interesting, because I was a correspondent in Brazil for a few years, between 2014 and 2017. And at the time, credit cards were not incredibly widespread in South America, but certainly in places like Sao Paulo, big cities, Mexico City, they were quite popular. But they weren't used as credit cards. They were basically used as debit cards. You had this term called totaleiro, so the person who pays the total every month, right? So they don't actually pay any of the credit fees or interest on, because they don't use it in effect. They didn't use the card to borrow; they just used it to pay.
Yeah.
So basically, you can see sort of the financial system sort of adapting to what consumers want, and also consumers adapting themselves and their behavior to what they want from the financial system. They basically wanted a debit card, but they needed a credit card to make some payments that they couldn't with a debit card. So it's an interesting, so you did sort of have an interesting organic coexistence there of different consumer behaviors with different financial service offerings. I wanted to move on to...
Actually, we are expanding to Brazil now, and it's interesting that you're mentioning that. And also we see pretty much what you're saying, and we have Boleto obviously there, but we see the government initiative also to help to change the consumer behavior quite a bit. Pix, as a local payment method in Brazil, completely changed the ecosystem quite a lot. And you can probably find some similarity in the region, because of really good government support, regulatory intervention, we actually help to accelerate some of this initiative.
So one question I have maybe about the future of the sort of subsector is, if you look back a couple of years ago, the poster child of buy now, pay later was Klarna.
Yeah.
At some point had a valuation of something like $46 billion. Then a couple of years ago, suddenly the valuation was $6.7 billion. I think now there was talk earlier this year that it might go public at a higher valuation, but not anywhere near what investors were betting on a few years ago. So do you see sort of a slight chill in investor sentiment when it comes to this method of payments, or do you see that as basically a sort of either a single company being overhyped at the time, or just basically more realism in the speed of adoption?
No, I think what happened is with the increase of interest rates, liquidity of funds and investors became more selective on what they are investing, and they were looking for business models that work and create, let's say, positive cash flow. And what you look at BNPL, one of these is the pressure on the fee that BNPL providers are providing. At the beginning, Klarna and everyone else was able to charge a premium. Now they have more competitors, and their fee is under pressure, and that created some kind of questions about the business model. Is it going to be maintainable, sustainable? And now they're coming back and say, yes, it's sustainable and maintainable. Those, I believe there was a hype. Now there is, say, real check that how are we going to make money out of this business, and how operationally it can be efficient, and which kind of segments it will serve. Because it's not credit cards still is there, debit cards are there, but those BNPL will be more in certain verticals that are providing for certain businesses, like in medical, in health, in education, white appliances, where they're being more used than others. And that's a reality check. It's happened, and I think it will continue to be there.
So, and what about the regulatory side? In Britain there was a fair amount of talk about, that these this makes it too easy for people to get into debt. Like sort of, there was, and regulators were worried, Parliament was launching investigations or probes into it. Remo, so on the regulatory side, because clearly this is something that many consumers want, as we see with when we look at the adoption figures, it's clear that this is a service that many people desire. What do you make of the, how do you assuage the regulatory worries, and how concerned are regulators in the region about the expansion of these services?
I think the regulators in the region have been quite open to this initiative, because we can see some of the first buy now pay later legislation, they were actually drafted by the regulators in this part of the world. And we do see, obviously, there's already the usual trade-off between, obviously, giving access to more credit, innovation, versus, obviously, balancing the risk. For example, in Saudi, buy now pay later, they cannot offer the service to up to 5,000 Saudi riyal for consumer. Yes. So it's a way to limit the concern that you were raising a couple of seconds ago. At the same time, I think the regulators also, they want to make sure that actually the credit risk check is done properly. And I think that's a good way, not only for the regulators, but also for the buy now pay later, because if I know I have strictly checks, also will help me to have less risk and less delinquency from our consumers, which means also a more sustainable business model. So from that point of view, I think there's a good balance at the moment in the region. I think it's very important, obviously this will be scalable if there is like more players coming, specifically on the specialized vertical I was telling you. Because putting a 5,000 Saudi riyal limit, for example, to somebody that's only education might not be necessarily fit for the purpose why this business model was created.
And I think at the beginning, BNPL tried to present itself as a payment method rather than a lending method. And that's how they could launch at the beginning. They'd say, okay, we are like any kind of payment method. We're not lending consumers. And the regulators realized this is part of lending and we need to regulate it. And now regulations being popped up. You have to apply all debit to service ratios and make sure that the consumers using the service have the ability to pay it back.
You mentioned education. Can you say a little bit more about the sort of specialized verticals? Because this is interesting, right?
Yeah. I have to say, in a couple of weeks, I'm hearing more and more specialized verticals. I mean, there is one company called Madfu in Saudi, that their value proposition is to focus specifically to help parents to pay the fee for the kids, specifically in the region where the access to private is actually higher, perhaps, than many other places in the world. It can be a bit of an issue to pay upfront, like between $10,000 and $20,000 per year for kids, and that actually solve a specific issue. But it's also interesting, that I noticed another buy now pay later called Remo that they do for renovation of apartments. So you renovate your apartment now and you pay later. They recently raised funds a couple of weeks ago. Time will tell if it's a business model niche enough to survive, or probably too niche.
Because you have home improvement loans, right? I mean, that's a sort of an old yeah, financial product that banks have been offering for a long time.
Exactly. And also we can see in countries like UAE, access to credit card is not hard, and getting high credit limit is also easier than I would say before. So from that point of view, it's going to be very interesting to see how this trend will come, and perhaps a topic for 2025 FinTech Forward.
That'll be a good topic. I have a question about sort of thinking about the region as a whole. So again, this is, if any of you in the audience have heard me ask questions over the past, today and yesterday, I may sound like a broken record, but this is really, I find this absolutely fascinating. So, many of the countries in the region, there are basically 1.5 big countries in the region. There's Saudi Arabia and the UAE, and the rest are sort of relatively small. So individual markets are quite small. But as a whole, if you add them all up, it's quite a large market. The problem with finance is that nation states, countries, they like to regulate their own financial services for very good reason. So if you want to expand your services across the region as opposed to being focused in any individual country, how easy is it for buy now, pay later companies? How harmonized are the regulations? How easy is it to cross borders with these offers?
Yeah, sure. Because right now we're expanding to Saudi, so we're into that process. Today, as a GCC union, There's some similarities on rules and regulations that helps, but in each country you need to get your own license. We don't have passporting like Europe yet. That takes time and effort and cost. So it's not an easy process in the meaning of I'm licensed in Germany, I can work in the whole European Union. And there's some kind of the specific rules that is not complicated. But once you're, for example, regulated in Bahrain, which we did first, going to Saudi Arabia will not be that hard because there's a lot of rules that we have in common. So we understand what they require, and that even give confidence of the, for example, for SAMA to provide a license to someone who's been regulated in Bahrain or regulated in UAE. It's much easier than someone coming from UAE, from Europe and US, understand the region itself. So it's not quite straightforward, takes time, and it's part of the business right now, yes.
Well, unfortunately, we've run out of time, but this was a great conversation, and this is ending on a relatively positive note. So thank you both for joining us.
Thank you. Yeah.
Round of applause for our speakers, please.
Thank you.
I think our customary photograph.
Oh.